Hey everyone, it's Dan Blackwell. Today is October 16th, 2023, and I want to shoot a quick video on the market update as we are in Q4. We're here in Costa Mesa wrapping up a property inspection on a building that we're closing in Q4, and I thought I would just take some time and go over some highlights as to what we're seeing in the market. So number one, we are closing transactions still. We have closed 27 transactions year to date. Last quarter, we closed one property closing per week. And as we move into Q4, we have a total of 8 properties that are non-contingent and another 9 properties that are in escrow. So we are seeing firsthand the deal activity, the closing activity, what buyers are looking for, where capital is. We're working with trade buyers. We're also working with a lot of different sellers out there as well. And then some of the transactions we've completed so far, or that we have currently going on this quarter, we have 21 units in Huntington Beach that we are under contract on. We have also a 12 unit on Florida in Long Beach, a 16 unit we have under contract in Long Beach on South. We also have an 8 unit in Laguna Beach that we just closed with multiple offers, and 16 units in the city of Fullerton. So we are staying on top of the market as much as possible. We are seeing what buyers' appetite is for on multifamily properties. There needs to be some level of a good basis going in on a price per unit, price per foot, where it feels good to a buyer, or they need to have a path to positive leverage. I think that's a big thing, and it's really hard to get to a 7 cap. So if they're getting a good basis and they got a good stabilization upside, close to a 7, I think that gets a lot of people very interested in the asset. All right, so one of the first things we're looking at with a buyer is today's rates are now 7% plus or minus. So there will be some headwinds and challenges with getting transactions completed at 7% versus the transactions we closed earlier this year when rates were in the 5s and 6s. So that's going to be an item. Also, you've got insurance challenges. We've done a lot of electrical upgrade within escrow for properties to meet the new insurance requirements for the buyers. And then also there are items that on certain properties that an insurance company has called out. Maybe it's slurry coating the parking lot. Maybe it's putting on a new roof. So there's a little bit more headwinds with buyers obtaining insurance for new properties. However, we're making things work. We're leaning in. We have the relationships within the market to get properties insured. And then the sellers that we've worked with, they're all across the board. There might be a partnership dissolution. There might be a 1031 exchange down leg. They could be just divesting of the ownership. We've seen a lot of that where properties, siblings that have inherited properties or beneficiaries have received assets and they might not want to own these properties long-term and they want to divest, and everybody might want to go their separate ways, maybe cashing out or completing a separate exchange. We've helped a lot of investors divest this year. So we are seeing a lot of demand for Orange County. That'd be one thing to highlight, especially on the smaller side. You call it your 4 to 16 unit properties. That is really leading the way within transaction volume for our team. All right, so overall, that's me just ranting and doing a little recap of what I'm seeing in the marketplace this quarter. We're really excited about what has taken place right now that we have within our team, and also looking forward in the future and staying optimistic, very long-term bullish on multifamily real estate. If we can help in any way, feel free to reach out. Thanks so much.